Hello, guys. Hello, ladies and gentlemen. Welcome. I would like to warm welcome you to our Liberland Railways Corporate YouTube channel. And my name is Denysyuzhakov. I'm founder of Liberland Railways Project. And today, let me continue speaking about one of our members, one of our corporate members of our corporate model railway called Coca-Cola. We continue speaking about such department as Coca-Cola HBC, a Hellenic bottling company from Greece. And last time we spoken just in short highlights of information about the company, and today I would like to speak about a little bit larger about the company, about a description, and a little bit about financials. So let's see on my screen. So guys, let me inform you that we are shooting this video on the end of 2023. So we hope we don't have a full information for this year, because this year hasn't finished yet. And of course, we can trace the data for this information in year 2022, and so these statistics, this information is on February 2023 with the results of year 2022. So, but you can imagine. You know what Coca-Cola is. I suppose every our audience, every our people who is watching this video have tasted Coca-Cola and another projects of Coca-Cola. But nevertheless, today we're speaking a little bit about business and investment of this huge company, and impressive results of their work. So let's see. First unit is operational review and strategy, prepared by Zoran Bogdanovic, Chief Executive Officer of Coca-Cola HBC. I think Coca-Cola HBC is not different with another departments from another parts of the world. So the main goal is deliver today and investing for tomorrow. So they have five questions to solve, five problems to be solved. This growth, story, priorities, driving strong performance, is winning a growing market, and they're really successful in it. Is enabling customer success through Coca-Cola's people, delivering strong financial results while navigating inflation, and investing to become the leading 24/7 beverage partner. So last time in previous video we have spoken also about their strategy 24/7. So it's any of product of Coca-Cola is available in this regime in 24/7. So it's their main idea. We can see here their strong financial progress. We can see organic revenue growth. It's plus 14.2%, and comparable EBIT. It's earnings before interest and taxes. Around 930 million euros, and returns of 345 million. Here in this speech we can met the market's numbers, the market's investigation, excluding Russia and Ukraine, because Coca-Cola lost Russian market, has lost Russian market as a result of their aggressive war, and they can't calculate Ukrainian market for two reasons, because some of Ukrainian territories is occupied now, and they can't measure the statistics at first, and the second, the main factory, Coca-Cola factory in Ukraine, was destroyed with Russian bombardment. So in majority of indexes, they will be writing information excluding Russia and Ukraine, and sometimes in some statistics it has been spoiled in their numbers. So let's see. We can see growing industry and strong brands. So you see Coca-Cola not the only one brand that they are selling. They sell several brands. I think we will see it in a couple of minutes later. So first of all, is sparkling gaining share versus branded and private label. Sparkling energy resilient and continue to be drivers of growth. Flexible plans, capabilities, and tools to adapt every environment, and customer behavior resilient across the majority of markets. Sparkling is the main group of drinks, and also sparkling. You can see sparkling growth here, plus 7.7%. As for low and no sugar, it's quite popular. You can see it's growing additional 14%, and adult sparkling. Adult sparkling, you see, for example, in this slide, you can see Schweppes and Kinley. So sparkling, you can see here profitability and volumes. Up double digits about non-sugar group, such as Coke Zero or Sugar Zero Caffeine launches. And also adult sparkling gained share. So next one is energy group. Group of energy drinks, also fastest growing category in NARTD is non-alcoholic ready-to-drink group of drinks. Consistent value shared gains, innovative activations yielding good results, especially in gaming. Revenue per case accretive, and ample opportunity to continue growing per capita consumption. So as for energy drinks, you can see organic volume is growing plus 32%. and percent of group revenue is 7%. And also we can see new launches of 15, as I see, as I could understand, is 15 brands of energy drinks. As for coffee, actually it was a surprise for me that also they're producing coffee. Nevertheless, last time in our last presentation, we saw it's not a large volume, depending on their whole drinks volume, and also depending on sparkling. Nevertheless, they are producing coffee. You can see such trademark as Costa Coffee, a strong out-of-home recruitment. Development of super premium offering with Cafe Verde Nano, and investment capabilities for the future. So they will be investing in it. To maybe we will see growth of coffee part of coffee group of their products. So you can see organic value as pretty high, up plus 45%, and cost out of home outlets they're indicating 8,000. And Cafe Vergana launches 13. I could also suppose it is different variations of that coffee. So about opportunities to drive revenue per case further. Category, package, and channel all positive contributions to mix, and as for mix and as for pricing decisions are data-driven, proactive, and agile. Actually, as for prices, they're working in Eastern Europe and in Africa. As we're speaking about Hellenic bottling company as Coca-Cola HBC. So inflation also is reflected in the prices. We will see it a little bit later in this presentation, in this pitch. So about commerce driving incremental revenues. They're working not, for example, as in B2C sector, but in B2B. So they have two routes: this route to consumer, 59% growth in electronic retail and food delivery applications, and route to customer. Customer portal B2B, 34% of orders in Czech Republic and Slovakia, 36% of orders in Ireland, and the launch of HoReCa-focused B2B platform in Italy. So in several countries, and you can see growth in 2022. As for data capabilities, enhanced customer segmentation, we can see a strengthening of RGM and RTM. RGM is revenue for growth management, and RTM is route to market. So in both segments, they are showing growth. As micro segmentation live in 10 markets with further rollouts in 2023. So I think this information will be available in February 2024 for the investors. And optimizing marketing activity in granular level, targeting outlets of certain packs and products, and personalizing visits of optimizing frequency and improving cooler placement and productivity. Actually, they're writing here, they launched Data and Analysis Academy. I think it's just for Coca-Cola drink specialists. If you know or something about it, you're welcome to indicate it in the comments below this video. As for Egypt, you see they're talking about Egypt here. Actually, let me remind you, they're working in 2 African countries now. I mean, Hellenic Bottling Company in Nigeria and Egypt. So Egypt is very very good market for them. So they are building a stronger business, improving capabilities, expanding portfolio, integrated teams, improving efficiency, incorporating ESG, so on and so forth. So as they're showing really good growth. Opportunity, they have a good opportunity to increase per capita consumption, opportunity to become market leader. It's not they are not market leader yet, but it's a good opportunity for them, and I suppose my opinion, they will reach it. And also very good reason for such optimistic point of view is growing population up more than 100 million population. A little bit about sustainability and about green behavior of the company. So first of all, they ranked world's most sustainable beverage company by Dow Jones Sustainability Index in 2022 is for 6th time. So it's sustainable. It's very good. The company is sustainable. As for packaging and climate, you can see the progress transition of 100% of our PET. Our PET is recycled PET or polyethylene terephthalate, which is bottle of PET. We used PET, and now they're using our PET, and 100% is very good index. And also launched a label-free bottle of water. I have checked the water; it could be found in Switzerland. So all the information on the bottle is just engraved in the bottle by itself. And investment in in-house RPET capability in Italy, Poland, and Romania. So they investment in RPET capabilities in these countries. And also 45 million investment in recycling technologies to date. Sorry. And you can see they used 500 million euros green bond issued in September 2022. And of course, the next unit is financial review, which could be interested for investors because it is this report is for investors, and we will try to have a just quick overview of Coca-Cola financial review for 2022. So here you can see consistently strong top-line performance. First of all, is organic growth, but in 2020 it was a little bit negative index. I suppose it could be connected with COVID. And also here indicated organic growth excluding Russia and Ukraine. You can see in 2022. I explained to you why they haven't included Russia and Ukraine. I suppose because it's very poor statistics on these countries, not dependent of Coca-Cola management. About cost of inflation in 2022, I told you Eastern European countries and African countries, yes, there is a huge inflation. And you can see COGS split. COGS is cost of goods sold. So 31% of concentrate, 45% of raw materials, packaging, finished goods, 21% of overheads and haulage, and 3% of depreciation. Also, their managing is pricing and other RGM actions. Again, let me remind you, it's revenue growth management, is long-term contracts with suppliers and hedging, and productivity and operational efficiencies. So they're managing it to keep inflation and to keep a certain price level. A little bit of organic EBIT. EBIT is earnings before interest and taxes. This index up to 1.3% despite cost inflation. You can see in red is growth of 1.3%, and compatible EBIT growth is 11.9%. Actually, as I see in 2021, there was a sale in Cyprus, asset sale in Cyprus, and also it's impacted of the graphics. So they excluded this information from their diagrams. So OPEX is percent of sales. OPEX is operating expenses. We can see is 24.6%, and marketing expenses is this index is 11.5%, also excluding Russia and Ukraine, because they can't count it at the moment. And three markets we spoke last time. Let me remind you. So they have three markets. Is established markets. Just a second, let's see. So it's established markets and developing markets and emerging markets. So different countries. I can suppose as for established markets is the lowest indexes, because it's more organized market with customers, with partners. And as for developing markets, they are growing because it's not so stable. It's growing, and the indexes could be much higher than in established markets. So you can see as for established markets well-balanced revenue growth. You can see volume plus 9%, price plus 8%, and revenue plus 18%. High single-digit volume growth across all main markets. Price mix driven by price increases in all markets, and positive package category and channel mix. A single serve mix plus 4.5 pp benefiting from out-of-home activations and growth of premium glass portfolio. actually very interesting. So they launched a premium glass portfolio, not in RPET. And organic EBIT growth despite cost pressures and cycling one-off 23 million real estate disposal in 2021. So unfortunately, I don't know the report in 2021, but we can see they have had a disposal, real estate disposal. Nevertheless, despite of this disposal, they have good organic EBIT growth. It's let me remind you, it's earnings before interest and taxes. Here's developing markets. Let me show you digits, numbers. Developing markets, strong volume growth. You can see, as I told you earlier, its volume is numbers a little bit higher. As volume is plus 15%, price and mix plus 11.9 is near 12%, and revenue plus 29%. Strong volume growth, double-digit volume growth across main markets. Price driven by pricing actions in all markets. Positive package, category, and channel mix. In Poland, category recovery after sugar tax, complemented by strong share gains. So it was a problem for the company in Poland after sugar tax. Nevertheless, they are showing growth in that market with such problem. Organic EBIT growth despite the COGS pressures. COGS is cost of goods sold. So also they are continuing to grow organically. And emerging markets, resilient performance despite headwinds. So actually we can see the volume is negative, index is minus 10.9%, price plus 18%, revenue plus 5.5%, compatible EBIT margin 11%, and organic EBIT even decreasing minus 1%. Growth negatively is impacted by performance in Russia and Ukraine. Also, organic revenue grew by 23.5% and organic volumes by 4.3%, excluding Russia and Ukraine. Because if they include it, it will be very large loss for them. Strong price or mixed development to help offset inflation and FX weakness. And as for Egypt will be incorporated into organic performance from January 2023. So they're working with Egypt this year pretty good. I expect to see good performance, good index, good report in 2024 about Egypt. As for EPS is earnings per share. It's very good information for investors. You can see plus 7.7%, and the payout ratio is 46%. It's dividend per share. So another year of robust EPS progress. Finance costs increased for 15 million euros due to consolidation of Egypt. So Egypt, very good market and very good potential market for them. Compatible tax rate of 26% at the midpoint of guidance, 25 to 27%, and dividend recommended at 0.78 euros per share, up to 10% year on year. Another year of investment and record FCF generation. FCF is free cost flow. You can see capex plus 49 million. Capex is capital expenditure, and FCF you can see free cash flow is 44 million euros. And diagrams also show you all information. Capex up 49 million year on year, with investments across the following points. First, capacity expansion of growth markets and on targeted package formats, cool expansions to drive single-serve consumption, digital commerce investments. Yes, we have seen just a couple of minutes ago they're investing in several countries, and RPET facility in Italy. So net debt to EBITDA is 1.2x. EBITDA is earnings before interest and taxes, depreciation and amortization. Continued ROIC. It's return on invested capital. You can see this information excluding Egypt, and for 2020 it was excluding Cyprus asset sale. BP, so we can see index plus 100 BPS. It's basic points in business language. They're showing increasing profitability versus 2021 in 2022. Cycling the Cyprus property sale, which added 40 BPS, 40 basic points. It's not from operational activities, it's just from property sale. So as for investor, it's not a good index. That is why they're indicating asset sale excluding Cyprus. This asset index excluding Cyprus asset sale. It's a very good approach to show the numbers, the indexes. And here the outlook for 2023. You can see organic revenue growth about 5%. Organic EBIT growth in the range for 3%, and COGS as cost of goods sold increased by low teens. So here's outlook for 2023. I hope they reached their plans. And sustainable long-term growth. It's I think it's idea of the company. It's the motto. Sustainable long-term growth is leader of an attractive growing industry. It's 24/7 portfolio and execution capabilities to win share. Diversified geographies with exposure to growth. Relentless cost efficiency and strong balance sheet. engaged team with a winning mindset, and determined to remain a leader in sustainability. So these points is the plans of Coca-Cola, MIP, especially Coca-Cola HBC department. Nevertheless, you can see it's one of monsters, one of unicorns of business in not only in beverage segment, but in business in general. And we can wish them good luck, and we will be happy to consume their products, their drinks, and hope they will bring their investors a good profit. So, ladies and gentlemen, it's all information I would like to tell you about our member of our corporate model railway, Liberland Railways. So thank you for the watching, and I will be very thankful if you put likes under this video to continue introducing you with another our members of our corporate model railway. And so I wish you all the best, and we'll see you in later videos. Bye.